Are low interest rates impacting on your investment returns? It's time to rethink. Rethink Investing creates wealth for clients through the strategic purchase of positively geared, high cash flow commercial property. Industrial properties, retail assets, or office spaces can be a smart investment option that produces significant and long-term return on investment. Rethink your investment options and look to commercial property. Learn more at rethinkinvesting.com.au. Rethink Investing, Australia's #1 commercial buyers agency.
Welcome to the Smart Property Investment Show with your host, Phil Tarrant.
Hello there, everyone. Obviously, I am not Phil Tarrant. Phil Tarrant is currently in Singapore, so I'll be filling in for today. Obviously, got some pretty big shoes to fill here, so I will do my best. But luckily, I do have some support with me in the studio today. Steve Kuper is back in the studio for the second or the third time? Second time. Welcome back, Steve. Thanks for coming on.
Thanks for having me, Em.
No problem. Thank you. So over the last month or so, we've had a pretty busy time at smartpropertyinvestment.com.au. We're actually launching a prop tech focus for the next month. And so we've heard a bit from your Bonza and a bit from Managed about how technology is sort of shaping the investing game, the benefits of it, the challenges that come within in terms of regulation and all that sort of thing. So that's been really interesting. Get onto smartpropertyinvestment.com.au and check it out. Steve, we're going to be using this time today to talk a little bit about what we're seeing in the property market at the moment, but I also really want to give our listeners a bit of an update on what you've been doing personally. So you obviously bought your first property at 23, was it?
Yep.
Excellent. That's a very young age to start property investing.
Yeah, I got cracking fairly early. Mum and dad, well, dad more than mum, but really pressed home the focus of buy land. God's not making any more of it. So and property in Australia is a really good asset. You're never really going to lose on it. So, yeah, that really drove it home. And then I was lucky enough that about 4 years later, I bought my second place.
Excellent. That's great. And I understand that your strategy is, sort of focusing on those outer regional markets and less so on the capital cities. Is that right?
Yeah, you tend to get more in terms of capital growth and your rental yield as a portion of your initial outlays is greater. So you tend to make a little bit more money and the appreciate in value is a little more of a long-term strategy. But, if you're holding it for a while, which is my plan is, you come out on top or in front fairly quickly. So, yeah.
And I understand, obviously, when you first bought your first place at 23, and if you don't mind me asking, how old are you now?
29.
29, yeah. So your knowledge and your understanding of the property market would have changed over time. And I do like that point how you made about, having those dinner conversations with mum and dad, talking about that. That's very similar to my own property investment journey as well, where it was kind of always brought up and encouraged to, fulfill that sort of quote unquote great Aussie dream, right? So it's interesting. We're now in a sort of environment where I think we're seeing a little bit of a shift in that mindset. I think people are being a lot smarter with their investments. They're not so, much just trying to get into the game for getting into the game's sake. They've got that sort of long-term strategy outlook that, they're trying to achieve over the long haul. And because you're at the moment at that point where you're looking at expanding your portfolio, and how has that sort of mindset changed over time to you where you're now sort of thinking about long-term game and what you can get out of it for yourself as an investor?
Well, it's changed somewhat because I'm kind of at a crossroads of where I decide what I do with my portfolio. And I've got one option, which is to go and buy another ready-built investment property, or the potential is going into partnership with my best mate and building a duplex. And slowly turning that over and doing it in that way. So buying a block of land and having a pre-designed duplex and then going through a contractor and building it and then flogging it and then lather, rinse, repeat kind of thing. So I'm at that crossroads where I'm trying to work out what my best option is. So that's different. It requires a little bit more forethought. It requires a lot more forward planning, particularly because if I was to go and buy another place that's ready built and I've got a tenant there, I'm already getting income coming back in. Whereas if I go and I buy a place, I buy a block of land and I'm building, I've got the whole process where I'm paying more out of my pocket for potentially a greater return, maybe 6 months to a year down the track. But then you've got the capital gains tax and you've got all these sorts of things where you kind of can influence the decision-making process. So that's kind of the crossroads where I'm at right now. And I mean, I'm 29, I'm 30 in a couple of months, and I've always had this plan that I wanted 3 investment properties by 30. As long as I have it by 30 or before 31, I'm happy. I've kicked my goal. So I've got that looming, ticking time clock in the background as well. And it's good fun because it's a little bit of pressure and it makes me step up my game a little bit. And obviously at 30, you're kind of going, well, I've also got to consider what is my serviceability going to be? How's it going to impact buying a family home in, a couple of years' time and things like that. So I've got to weigh up all those options and work out what works best. So yeah, interesting times ahead.
Certainly one of those things that we see a lot with investors, is the pros and cons of different investing strategies. Do you go with something that's already steady, or do you make a bit of not a risky move per se, but a riskier situation that you put yourself in and then have to pay up front for a lot of assets more at the beginning, but then could generate a long return as well. Sort of a juggling act with those two. And I know that a lot of investors seem to have that common problem. When you're thinking about suburbs or, places in Australia where you are going to expand that portfolio, is there anything that comes to mind as being like, yep, 100% going to go there? Or is it a matter of like, here's a couple or an area per se that you're exploring more so than others? I know you mentioned the outer regional hubs in your last podcast. Is that still the strategy?
Yeah, I don't want to give too much away.
Of course.
I mean, there's the pro and con, right? If I give too much away, people will then go and buy in those areas and it'll raise my property value.
And we do have over 100,000 listeners, 103, I think. Our producer, James, yes?
Yes, about 103,000 last month. So that was a record actually for Smart Property, yeah.
Amazing. So, yeah, I understand that for sure. But we are on the Smart Property Investment Show, so you've got to give us a little bit of information there, Steve.
Yeah, look, I'm still not sold on buying a property in a major metropolitan area. I mean, I grew up in Wollongong and I've seen the property prices in my hometown, home city, get ridiculous. I know there's a place down the road currently on the market down the road from my mum and dad's, and I'd say it's probably 900 metres to the beach and it's 1.6 million, and it's literally you're going to push the house down and build something on it. Mm-hmm. And as much as I'd love to be able to walk in there and go, yep, here's $1.6 million, I'm going to knock this down and build a family home, I can't help but think that is a little excessive. You've got your lifestyle, you're close to the beach, close to the city, you're close to Sydney, it's all of those things, but I can't kind of see that recouping of costs. And the mortgage repayments, right? I was having a conversation with my mates who's a banker the other day, and he said, we're constantly hearing that at least 50% of Australian mortgage owners are in mortgage stress. And I'm sitting there thinking, bloody hell, we're at the record low interest rates. What's going on? So, yeah, I'm not sold on buying in the major metro areas yet. For me personally, I don't see the return on it. And there's a whole heap of permutations that go into making the assessment.
Absolutely, yeah. And I want to expand on that a little bit more, Steve. But before we do that, let's go to a quick break. We'll see you back soon.
If you're a regular listener to the Smart Property Investment Show, then odds are you're already a property fanatic who loves hearing stories on investing from real people, the good, the bad and the ugly. Be with people just like you and join the group Passionate Property Investors on Facebook now. Become part of a community who know what to do and when to do it. And the time to do it is now. Passionate Property Investors. Tribe, tools and tips. Find us on Facebook today.
Welcome back to the Smart Property Investment Show. I'm your host, Emma Ryan. I'm the editor of smartpropertyinvestment.com.au, filling in for my colleague, Phil Tarrant, your regular host, who is currently in Singapore. We're on with Steve Kuper. He's been on the show before and is telling us a little bit about his investment journey. And we've touched on sort of the next phase in that and the goals that you've got in place, Steve, which I think is really sound. It's obviously quite big goals in place, but certainly achievable, and something that every property investor, I think, has in the back of their mind. Where do we go to next? What's my portfolio strategy? All that sort of thing. So great to see. I want to draw your attention to an article that was posted on smartpropertyinvestment.com recently, and it was by a guy named James Nyhill. Forgive me if that pronunciation is wrong, but he's essentially the managing director of Patrick Leo, and he wrote an interesting article, I think, that was about, why you shouldn't invest in your own suburb. Sort of follows a similar theme to what we're talking about here, Steve, in the sense that, your strategy has been on those outer regional areas despite living in Newtown, is it?
Yeah, yep.
Yeah, exactly. So I think what he said would quite resonate with you as well. He says a lot of things about it's a big no-go from a risk perspective, which is what we're talking about. Is that sort of where that idea comes from? Not just the price and obviously what we're talking about with Wollongong previously, but also the return value on what you're getting. Is that sort of where your decision lies and why you haven't explored the suburb of Newtown where you currently reside?
Yeah, to an extent. Just there's also having the places that I've acquired, they're long-term kind of set and forget. They're going to just steadily increase in value. I've got a really good property managers and I've had a history of really, really good tenants so far, knock on wood. So looking then at as you said, I live in Newtown, it's also the possibility of would I use that at some point to kind of to stay, or would I just use it purely as an investment? And actually, funnily enough, my housemate and I went up because he's a Sydney boy and he and his partner are looking at moving out and buying a place. And he and I went up the road and had a look at an auction the other day, and it's ridiculous.
They're going absolutely nuts, aren't they?
Yeah, and it's a shoebox. You couldn't swing a cat in it. So you kind of sit there and go, is it worth it?
Yeah.
You know, I couldn't imagine spending that money and it not being a family home.
Yeah, absolutely.
And, you know, it's not fair on kids and pets and whatever else.
I was about to say the whole pet factor would really be a problem for that, I think.
Yeah.
And kids, of course, but speaking from owner of a sausage dog.
Yeah, I mean,
a bit problematic.
Yeah, and I'm a big dog fan, so like I couldn't justifiably have that in a small terrace apartment or things like that. I mean, as much as I'd love to be able to just go in and buy one and renovate it and make it beautiful, for me, it doesn't make any investment sense.
Yeah.
That's just my personal opinion. I know plenty of people who would jump at the idea of doing that and using that as their, what's the term now, forever home.
Yeah.
But for me, no, that doesn't make any sense. And I like the idea of rent vesting. You know, I'd like my rent a little lower so that I could have more money.
We all, you and everyone else in the population of Sydney especially, I think.
Yeah. But yeah, it just doesn't make any sense. And look, I love where I live. I lived in Redfern for 2 years previously, and I've seen Redfern change immensely. Like the gentrification of the suburb is it's ridiculous. Redfern of what it is today compared to what it was 2 and a bit years ago when I first moved there compared to what it was 10 years ago, chalk and cheese.
Absolutely. I actually wrote a story on that on smartpropertyinvestment.com.au as well, and it's insane to see the amount of development that's taken place there, and it's now an extreme hotspot, and the people that you get coming through for those auctions and the prices they're paying for, as you say, shoeboxes is quite outrageous, isn't it?
Yeah. I mean, I remember going for runs on a Saturday morning and I used to get quite a laugh out of it, of the husband or the fiance or the boyfriend having an argument in the middle of the street with the missus because he hadn't bought the right tiles or something like that. And you sit there and you go, this is let's say conservatively $1 million for a terrace. They've got to spend just like making sure that everything's done to heritage code and things like that. You're looking at another $1 million. And I sit there and they're not much older than you and I go, who lent them $2 million? I kind of freaked out when my bank turned around and said, oh, yeah, you can have X number. And I'm like, oh, God, okay.
Yeah.
And it's just like you see what the bank's willing to lend you, and you get a little bit of a shock to the system because you go, hang on, how am I going to pay this back? Especially when you see, you know, your HECS coming out and your tax and all of that. You go, bloody hell, there's no way I'm going to pay all this back. But you stay on top of it, and, you know, part of the responsibility of being a mortgage holder is that you make sure that you go without so that you can meet your financial obligations. And that's something that mum and dad have always impressed on me, is that it's very much a responsibility. You never let your debts go unpaid. What's a bit of a Game of Thrones twist there?
The Lannisters always pay their debts.
Yep. Exactly. So I've been raised with a very similar mentality, is you always pay your debts.
Yeah, well, I think just, you know, me personally, and I think most people would agree with this as well, you kind of need to have that mentality to be a successful investor. And that's what, you know, I think there's been a lot of concern raised recently with, you know, the first home buyers 5% deposit. You know, while it looks great that it's encouraging more people into the property market, there's all these other, you know, potential consequences that could come from that, you know, from people that might not be able to pay back their mortgage eventually over time, and they've been able to get in really well, but they haven't been able to sustain it over time. So I think that's certainly something that we're going to have to look out for as well. We'll be back in a moment. We'll just go to a short break. See you soon.
Are you 100% satisfied with your current property manager? Tired of chasing them for updates? Is making more money from your property investment important to you? With your Bonza, you get one platform, one point of contact, and one low management fee. For greater ROI from your property investments, visit landlordroi.com.
Welcome back to the Smart Property Investment Show. I'm your host, Emma Ryan, filling in for Phil Tarrant. Joining me is Steve Kuper. He's been on a couple of times, just sort of talking about the gentrification of Redfern and other inner city suburbs, which I think is really interesting. James, our producer, is in the house. We've got a suburb search functionality on the smartpropertyinvestment.com.au website, which basically outlines different hotspots and sort of a bit more information about how they're tracking and how they've tracked over the past 3 to 5 years and all that sort of thing. James, would you mind pulling up Redfern?
Can do, for sure.
Telling us a little bit about that. I think that's just one suburb that is particularly interesting, just given that, when I was growing up, Redfern was almost seen as a bit of a dodgy area.
It was yeah.
Now it's where everyone wants to be.
Well, it's funny. I remember when I said to my mates, because I lived in Canberra for 2 years and then I moved back home with mum and dad for a little bit before I moved to Sydney. And I remember telling my mates over a breakfast one morning, I'm like, oh, guys, I'm moving to Redfern. And they're all like,
what?
Yeah, they're all like, you're going to die.
Yeah.
And then, moved into Redfern and loved it. The funny thing is, though, like living in Redfern, and I was having a laugh about this with a couple of our colleagues the other day, was I actually used to order out more living in Redfern than I do in Newtown.
Really?
Yeah, I tend to cook more at home in Newtown than I ever did in Redfern.
Why do you think that is? What do you put that down to?
I think it might be a property size.
Yeah, okay.
Because where I was in Redfern, it was quite a large apartment, whereas where I am now, the kitchen's right there, so it can't escape the kitchen kind of thing.
Yeah.
And it's also just where I am in Newtown now is it's a much nicer environment. It's a really nice little apartment, and, the kitchen overlooks like a shared garden, and on the other side, on the street side, it's a very leafy street. So it's nice. It's a really nice atmosphere to cook in, and it gets expensive.
Yeah.
It really does.
Oh, you're preaching to the choir, my friend. Yeah. I know exactly what that's like. I think I've ordered Uber Eats twice this week already. So, I've got a bit of a problem, though, with that.
Yeah, me too. I live in Newtown as well. There's too many options.
Exactly.
Oh,
Yeah. I blame it on the suburb. Speaking of suburbs, how's Redfern looking, James?
So I've got Redfern up here on smartpropertyinvestment.com.au. So we've got a bit of data here. Look, the median house price is sitting at 1.4 million or around that.
Wowzers.
Unit price is about 995,000 average. So it's not cheap in Redfern. In terms of growth, we'll look at house prices here. So in a quarterly sense, it's seen a median growth of 6.34%. Ooh. Over 12 months, it's seen a 3.98% growth. Over 3 years is pretty flat, negative 0.09, so pretty much stable there. But over 5 years, it has seen a 34.01% growth with a 10-year average annual growth of 7.14% and a gross rental yield of 3.26%. Yeah, so it's obviously one of those suburbs that's just high demand and kind of keeps shooting up. Yeah.
Well, I think it goes back to what you were saying as well, Steve. The past 10 years in particular, it's just seen phenomenal.
Yeah, and it's proximity to the city as well, right? It's, every train stops at Redfern before it goes to Central.
Redfern's like it was the old Central Station.
Yeah.
So interesting area.
Great vibe. There's always something going on. It's a little quieter than Newtown, but where I am in Newtown, I'm, even though I'm 600 metres from the Enmore Theatre, I don't get any noise. It's actually quieter for me in Newtown than where I was situated in Redfern.
Yeah, right. That surprises me because Newtown's such a happening place in terms of bars and clubs and all that. So interesting. Speaking of Newtown, actually, James, have you got those stats for Newtown as well, just so we can compare?
Yes,
I think that's interesting.
Yes, I've got Newtown up here as well. Just comparing the two, looks really similar. Median house price in Newtown is 1.352 million, so a little bit lower than Redfern, but I think a lot of the places in Newtown are potentially a little bit smaller, a lot of small land blocks there. A quarterly median growth in Newtown for houses is 3.24%, so a little bit less than Redfern there. I've seen negative 0.09% growth over 12 months. Over 3 years, it's seen a 4.04% growth. And over 5 years, it's seen a 35.25% growth. So very similar over 5 years to Redfern. And I think they've both probably ridden that same kind of wave. 10-year average annual growth in Newtown is 7.96%, and gross rental yield is 3.04%. So, look, really similar numbers to Redfern there.
Yeah, much for much, really, isn't it? I suppose with Redfern, you have got that, close proximity to the CBD, which is probably the difference there. But interesting, I think, obviously the inner west is an area in Sydney that we're seeing a lot of boom activity at the moment and probably going to continue over the next year or years, as well as our northern beaches and whatnot. At least that's what all the experts are telling me on smartpropertyinvestment.com.au. Steve, thank you so much for joining us today. Really appreciate you coming on. And be sure to keep us updated once you decide what you're going to do there.
Will do. Thanks, Em. Thanks for having me.
And for all of you guys, please get on to smartpropertyinvestment.com.au. We've got all of the latest news, analysis, research and opinion pieces. Also some stories from investors such as yourself that you can really learn from, either good or bad stories from. It's always good to, I think, compare your investment journey with others as well. On our socials, it's Smart Property HQ. And if you've got a story to tell or you'd like to come onto the show, please get in touch via editor@smartpropertyinvestment.com.au. Thanks very much for joining us, guys. Have a good one.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.